And welcome to Recovery Report Live. I'm Dan Odess, president of GlobalPro, where we manage risk to recovery, and we have managed more than $1 billion in that recovery. As many of you know, here at GlobalPro, we are a group of industry experts, both in construction, insurance, and many other facets, which helps us manage our clients' risk to recovery. And in that, we need to be experts in construction as well as insurance. And today, obviously, is a milestone week for those, particularly in the Florida market. But the impacts of Hurricane Andrew in 1992 continue, the ripple effect of it, continue to impact and affect everyday life, both in our pockets, the way in which we build, the way in which decisions are made on a legislative level. There's many impacts of Hurricane Andrew. It was an inflection point really in the real estate industry, but there was broad implications throughout many other industries and changes that came about because of Hurricane Andrew. Now, Hurricane Andrew, just as an overview, Category 4 storm, which dramatically impacted and drastically changed so many lives. There was 41 deaths, $37.6 billion in damages. Now, I would put an asterisk next to that number because there's many different other numbers that are floated out there and many other numbers that people use depending on where they were being reported. But let's just say there was billions of dollars in damages. There was a tremendous loss of life, and many lives were dramatically impacted by this. And industries, there was so much industry change throughout the country, internationally, and we'll get into that in a minute. It took notice of the changes that were going on. And to this day, Florida continues to become the kind of the test case, if you will. From a risk management standpoint, there's so many risk studies done on Florida. From the construction standpoint, there's so many, there's changes and there's actual studies going on in Florida that are not done anywhere else in the entire world with regards to building materials and practices and the types of ways in which we construct and do different things. There's many changes that we've seen, this massive migration just recently here in 2021 to 2022 with people coming down, and what that's going to do as far as the impact on economics and how it's drastically changing where and what people do and how they do it in our everyday lives. There's so much that goes on in Florida that makes an impact. And now, well, it's not the end-all be-all for all changes. Things drastically changed on August 24th, 1992. And that's the focus of today's conversation, is about what did that mean for all of us. So the first thing I want to break down is construction, because on the side of construction, there's this thing called the continuous load path. Now, many of us have probably never heard anything about it, but that's really where the changes and the focus of many of the changes were when it came to construction. This is how your building is connected, your home, your community association, your office building, whatever it may be. It's how it's connected to the foundation, to the earth, as well as from the walls to the roof itself. There's many changes to this continuous load path, which led to kind of the revamping of engineering practices, construction practices, and as well as insurance rating and studies that were going on there. So, and that's really where the strongest winds, or the impact of those strongest winds, make an impact on building and could cause catastrophic loss or damage during a high wind event, which obviously, being a Category 4 storm, Hurricane Andrew obviously was. This also led to controversy over some building practices by some of the biggest builders in the nation at that time that were building what we maybe call production or tract homes in Florida, and it tested the building materials and methods being used or approved at that time. Now, the building code up until this point was really kind of disjointed. There was many different ways. There was in Florida, there was some 400 different municipalities, and the enforcement of it was questionable at best. And so all of those things, again, all that changed, right? Building code practices changed, the enforcement practices changed, legislative practices changed, engineering practices changed, construction practices changed, insurance practices changed. Where we live in the consideration by a potential homeowner or even a business owner changed, right? We were at times fearful of coastal areas and how we may be impacted by future storms. So again, like I said, these issues are pervasive. They didn't just impact just these two industries that I'm focusing on today, but I want to highlight some of those things. So we talked about continuous load path. Also, the legislative changes really evolved by 1998, right? So several years after the storm is really where we saw the adoption of Study Commission's recommendation and amended Chapter 553 under the state of Florida law, right? And that's the building construction standards. All right, they created a minimum standard. Now, I'm reading from some notes here to make sure that I have this terminology, and they use a lot of acronyms. There's so many different government organizations and agencies who are involved in these changes. It's near impossible to keep all this straight. But just know that shortly after the storm in 1993, there was organizations formed to investigate these issues, and thereafter changes started to occur. But it was actually several years later that they actually took hold and took place, and you really saw the enforcement changes occur. And then as of March of 2002, the Florida Building Code, which is developed and maintained by the Florida Building Commission, supersedes all local building codes, right? And I mentioned how there was over 400 municipalities, and there's many, and the enforcement of it was questionable. So now we have, for the first time, where the Florida Building Code comes in and says, okay, no, we're taking over here. We're the precedent. It's not local. Now we're gonna require the local authorities enforce these codes, but we now have the Florida Building Code, right? The Florida Building Code is updated every 3 years, right? And it could take up to 6 years for those changes to be adopted, though. That's what we've seen on a trend. Now, in 2017, we have yet another inflection point. We have what some call the flip. All right, the flip is from the Florida Building Code to what's called now formerly known as the International Code, and the International Code has since then had some additional changes to it. We've had many different changes, even as early as 2021. There was additional changes to it. Interestingly enough, though, in the last legislative session here in 2022, there was lobbying efforts to change how the insurance industry enforces or considers the requirements of the building code. Now, we have seen in the past where legislation has tried to impact or change the building code standards to this pick and choose kind of method, but this change in 2022 is remarkable because some of the focus of the controversy, if you will, back in 1992-93 had to do with this continuous load path, which was heavily focused on the roof structures. Well, here we have legislation in 2022 that really kind of gives the insurance industry this opportunity to pick and choose what it's going to pay homeowners for in the event of catastrophic failure and damage to their roof, and how they're going to pay and compensate for it, which left a lot of more questions than answers following the enactment of the bill's 4D2D, and questions remain as to how old is a roof if you were to make repairs, generally speaking. And the lobbyists and the government officials that were hired and that were lobbying for and wrote these bills couldn't even answer simple questions about the age or considerations of roofs in the event that damage were to occur to it and you were to make a repair rather than a replacement, as it has been the precedent for so many years. There's what's formerly known as the 25% rule, and sort of a change to that, and a change in way in which that is enforced, or the consideration given by an insurance company for the replacement of a roof. So, and that brings me to the changes in insurance, right? So, in kind of researching in preparation for today and speaking about this, I obviously had knowledge of some of the controversial points and issues that arose in the wake of Hurricane Andrew. But going back and reading these things again for like the 100th time, every time I read it, I learn something new. And every time I read it, it still gets the hair up on my back and gives me the goosebumps when you read some of these things. And I want to read from a memo from an actual senior executive for probably one of the largest insurers in the U.S. I think at the time, maybe even still today. And literally the same day Hurricane Andrew hits South Florida, this person issues a memo. We have the opportunity from this, and everyone must probe with brokers and clients. Begin by calling your underwriters together and explaining the significance of the hurricane. This is an opportunity to get price increases now. We must be first, and it begins by establishing the psychology with our own team. Please get it moving today. This insurer eventually recorded an after-tax profit of over $300 million in the 3 months to end 1992. All right, so a call for profits the day the hurricane kills 41 people, causes billions of dollars in damages to Florida, and there's a call for profit. There's a call to establish the psychology that they need to increase prices. But wasn't there consideration for this in the premium at the time that you sold this insurance? And if you look at what was going on then, up until the point of Andrew, with regards to insurance and the cost of insurance and the types of policy that were being sold, there was this race to the bottom, if you will, and there was a lot of insurers there. There was a lot of insurers that were selling insurance instead of Florida private insurance, whatever else. There was this competitiveness within the market, and it was a great market. There was a great market with a lot of competition, interesting products being sold at competitive prices. And the call from the largest insurer in the U.S. at the time is to change the psychology and to justify price increases in the wake of the storm. Now, I say this because there is another insurer that also was one of the larger insurers in the state of Florida, actually has posted on their website, championing all of their efforts since Andrew and its anniversary, and admits on their website, and I'll read from their website, it says, another obstacle we faced with Andrew was the need for claims personnel specifically trained in total loss estimating, because of how the insurer was set up. Identifying, deploying personnel with the right training was difficult. In some cases, resources were not ready to deploy for more than a week. It put a lot of stress on everyday claims operations because we needed so many claims handlers to assist with Andrew, all of who had responsibilities their home teams filled while they deployed, right? So, interesting, right? So you have one insurer the day of Andrew saying, let's focus on profits. And you have another insurer many years later on the anniversary of that storm admitting that they didn't even have the resources to adjust claims. So, where was that money going? Where were those profits that they were raking in going? What were they doing with that money? And while there was a lot of insolvency with regards to some of the insurers that were selling insurance in Florida, it begs the question why the largest insurers at that time in the state of Florida that were selling insurance, one was focused on profits, made tremendous amount of profits in the wake of Andrew, and the other one is admitting that it did not even have the resources to respond to claims. All right, you reconcile those two statements for me. And why, if there was so much alleged insolvency that led to all this reform and the need for increased rates and everything else in order to fortify these insurers, after-tax profits of hundreds of millions of dollars in the wake of Andrew, and another insurer admitting they don't even have the resources in order to even respond to the claims. Now, there's class action lawsuits filed against contractors that allegedly did not properly build or use proper materials, which was settled for millions upon millions of dollars for those homeowners. There's, again, I honestly try to reconcile these issues and statements and understand what thereafter comes and what happens. And honestly, I want to state at this point, I was going to state a little bit later, in 2012, some 20 years after Andrew, the Florida insurance market had rebalanced. Okay, and there was new entrants were established, and there was yet again competition in the market. So, there was a change. There was a swift changes, right? So in 1993, we have the Florida Hurricane Catastrophe Fund to fill the immediate reinsurance gap when the market seized up after Andrew. Right, so we have a seizure in the market. We have the market seizing up. We have another insurer focusing on profits. We're eking in hundreds of millions of dollars in profits focused there. We have another insurer that says, I don't have the resources, but the market seizes up. The market seizes up. They don't want to sell insurance. So we create the Hurricane Catastrophe Fund, which basically is a levied tax on consumers. It's added to the policies. There's a structure, the FHCF is based on modeling results. Now, these modeling results are even more controversy, right? On one side, you have lobbying and special interest groups for insurance companies that claim that they have this new modeling that's going to better understand the threat of types of storms like this, and we're going to be better in the future. We're going to do better. We're going to do better by our policyholders. And by the way, we need more money for our premiums because we need to be able to pay for that things, despite the fact that we continue to report profits, and we admit that we don't have the resources on the ground to even be able to respond to claims like this. All right. So now, these modeling efforts were supposed to help better rate the cost of the insurance. Now, there has been discovery, though, that these catastrophe models, which are largely secret and certainly hidden and proprietary typically for each of these different insurers, what we have now learned is that there's actually what's called a customer rating index. And other similar names are given to it. And they're actually using credit information, okay, and other data to estimate whether you are more likely to file a claim. So that's personally, right? And so they score you on your likelihood to file a claim, and that is actually a contributing factor to whether or not you'll have lower or higher premiums or they'll deny coverage altogether, right? So it has literally nothing to do with the risk they're insuring. The risk they're insuring is the home itself or the building itself. Which is static, right? It's there. They have all the ability in the world to inspect the property, part of their underwriting prior to even buying insurance. And typically when I'm in a group and I'm asking questions of business owners, how many of them have had a visit from their insurance company prior to binding insurance? Few hands go up. When I ask them about after they've bound insurance, after they've potentially had a claim, how many times do they then have to inspections after that? And most of the room will raise their hand. So, there's question as to this post-loss underwriting practices that most insurers engage in. I think it's just a way to save money on expense while raking in profits. And then they're like, oh, we messed up here, or gotcha moment. Is when you actually need them to comply with the policy obligations, right, to pay you. So then in 2002, we have Citizens is formed, right? 2002, it's a state-backed insurer. It was a union between Florida Windstorm Underwriting Association and the Florida Residential Property Casualty Joint Underwriting Association, and it stepped in to provide backup insurance, right? So, and then again, as I noted before, by 2012. Most industry experts would report that the market rebalances. And then thereafter, there's many different changes through legislation, one which I know just recently, and we talked about in prior episodes. I encourage you to check out the YouTube channel to learn more about that stuff. So there was so much was impacted by Andrew. It cannot be understated. It can't even be overstated. Let me say it that way. There were so many changes and practices, but in all of that, when all the smoke settles and clears, and the dust settles and the smoke clears, to say it that way, and you investigate what we're told, what's reported, where the information's coming from. I mean, honestly, if you go and look at a dozen or so, outlets with regards to the amount of damage from Andrew, you can't even get a concise number on it. It's all an estimate. Even to this day, there's varying opinions as to how much damage it caused and what that number that they're reporting on actually stands for. I saw one in one article, it said 15 billion, right? And then in another article, it's reporting over 37 million. That's 37 billion, I apologize. So that's more than double, right? So, it's hard to say, without getting into the weeds on each of the numbers and what it actually stands and represents. Let's just, we can all agree it's billions of dollars, billions of dollars. And even one insurer in 3 months, the following the storm is collecting over 300 million in after-tax profit. And took that opportunity to make more money in the wake of it. That changed the psychology. So let's talk about psychology for a minute. I digress while we wrap up here on this Recovery Report Live. And thank you all for joining us today. That psychology is a big part of it. The psychology of fearing your insurance company. I talk a lot about deductible phobia and other phobias that people typically have now in the wake of hurricanes and major events, whether it's storm and flooding. We just saw tremendous flooding that occurred in the Dallas area, the greater Dallas area, which has impacted our office there, and we've been doing a lot of outreach. In fact, we had on the good folks from the bulk fire just a couple weeks ago, and if you just look at the reports, first they're trying to recover from the fires, and now they have this tremendous flooding that rolls through the area. So we continue our efforts to help that community and recover. And as we are with many other outlets now, because the damages are widespread. And sadly, many of these properties don't have coverage for the rising waters, the water that's coming up from the ground, because a lot of the areas that were impacted by this flash flooding situation are not in flood-prone areas. But things are changing, and the environment's changing. There's changes because of development. There's changes because of the weather conditions and the shifting patterns in the weather. There's many other factors that are going into it, but the one thing that stands true is that sometimes the things that we're seeing and reading aren't as they seem when it comes to the insurance industry. I think the construction industry has done an amazing job to try to continue to evolve at a much faster pace and click and be up on changes in technology. You see huge adoptions in technology in the construction industry, as opposed to what we've been reporting on the insurance side of things, where you see your largest insurers actually rejected and actually substituted for longer waiting periods of time to be able to respond to claims and many other things. So obviously we don't want to be all downtrodden about it. There is a silver lining that change is happening. And it will be for the better. And we're all a part of that here at GlobalPro. We continue to innovate ourselves by investing in technology and our people, by making sure that we have the best of the best on our staff that is helping policyholders recover and rebuild from all these major disasters, or the pipe breaks, the fires. The smaller things are becoming more controversial day in, day out, because we're buying policies based on sublimits. The limits on most policies almost are irrelevant with today in a lot of commercial insurance policies. And it's something that we'll continue to talk about more in later episodes. But I want to thank you all for joining me here today on the Recovery Report Live. This has been an awesome opportunity to reflect on the past so we can plan for the future. And unfortunately, at times, maybe we didn't learn our lesson. And I think this last legislative session was one of those moments that we will reflect on, and we will wonder with a lot of curiosity as to how some of these changes were made. And I'm interested to see how we're going to evolve from this and what changes are going to come to clarify some of the controversy and issues changes that were recently made. And maybe it's just been too long since, Andrew, for some of these legislators to remember what happened then. I hope it's not. I hope for the best. I hope that the legislation continues to evolve to the benefit of the policyholder. Unfortunately, we've been in a negative trend, both on legislation as well as satisfaction amongst consumers. So let's see what happens. I want to make sure you all have this information. Continue to tune in right here on the Recovery Report Live every single week. If you haven't already, hit the subscribe button, like us, and follow us on all our social media. We're going to be back next week with a special guest. Make sure that you hit the reminder when we issue those reminders. It's a great way to remind yourself and to get that little alert. Hit the notification buttons there on Instagram. It'll let you know when we're going live, when we're going to be broadcasting this, so you have all the most relevant information. Again, Thanks so much for joining me here on the Recovery Report Live, and we'll see you next time right here, 11 o'clock Eastern Standard Time, same place, same time. Thank you so much. See you next week.